We've seen another rejection for Bitcoin up at this yellow box, and the deal now is, can we continue to muster some strength to get higher, or is this going to be one of these fake outs that takes the market back below $27,000? We're going to be heading to 25, 24. I want to break this down for you, and the thing is that, this recovery, it really changed a lot for the market. We broke really important resistance levels. We didn't really do it with a problem, and most importantly, we now also have support, and this is something that's worth, paying a little bit of extra attention to. If you really look at the first rejection here, and then look at where the price managed to find some support, this was, in and of itself, this was a 3% move that happened within less than a day, and then we found support right at the bottom of this green box, this green box here at 27.5, being the bottom, which is exactly where Bitcoin was previously finding resistance. I mean, if we just kind of drop a line right where Bitcoin has found support now, previously and right now, this is so clearly the exact same place that Bitcoin was finding resistance at, which means that we've fulfilled the main thing that I said, we should expect for Bitcoin to do, especially if you're a bull, which is that we start flipping old areas of resistance into new areas of support. So that is definitely quite bullish for this market, and it is definitely a strong indication that we might actually have, a little bit of strength going behind us right now. And that's going to be really useful because we still have a lot of resistance. This is really important to maintain perspective of. If we do zoom out a little bit, we've still got all the same resistance levels that are in play for Bitcoin right now. People that are in their short positions still have a good, good reasoning to do so. If we take a quick look at the 4Flies dashboard, refresh what we're looking at right here, let's see what the, long and short, fear and greed sitting at 51 in exactly the same place. Long and short ratio stretching out a little bit, so we are still leaning too heavily long for retail traders, and top traders also, kind of strengthening their long positions as well. One of the things that I said is that when you see the long and short ratios skew too far in one direction, especially for retail traders, that can be a really strong indication that actually the market isn't going to do exactly what you're expecting, right? And as a result of that, the market did drop down and start sweeping lows. So, that does end up having really important, quite significant impacts on the market a lot of the time. But what's really interesting is a lot of the long positions actually closed when the price went up here. So that is what allowed this market to catch a lot of relief, I think, in my opinion, right here. But again, if we do focus on the facts, this resistance level still hasn't broken. This horizontal area still hasn't broken. We did wick above it, but we're stuck in it right now. And we were stuck in it for quite some time. The first time that we entered it this year, we were stuck here for about 20 days where we just couldn't get out of this range. And then we saw the big price explosion. Now, what I really like about this price action is the weekly chart. If we look at this on the weekly chart right here, we have had such an amazing recovery candle. This candle here took us right down to the lows, but this week, last week, we just erased all of those losses, and actually eclipsed that candle. This was a bullish engulfing candle, so that generally can be quite a strong indication of bullish momentum to come, right? If you look at this candle right here, this was a bearish engulfing candle, right? And I remember I was talking to you about this way back. If you were subscribed to the YouTube channel, you're going to remember that. And I was warning you guys that when we get bearish engulfing candles like this, it usually results in more downside action. And what happened? We fell by another 6.5% to the lows, and we stayed trending lower for multiple weeks, for a whole month afterwards. So, these bearish engulfing candles are really important in the market, and so are these bullish engulfing candles, right? Here's a bullish engulfing candle right here, and this one candle engulfing the previous two candles. You can see it just completely eclipses it, and then what happens afterwards? Yes, we have a few weeks of being weird, but afterwards we just explode upwards, right? I mean, and from the close of this candle to the high, we pump up by 27%. It's absolutely huge. So we've got another candle like that right now. This is worth paying attention to. This really is something that's quite significant. One of the things that I want to take a look at and share with you guys is my analysis of the monthly time frame. This is getting really hot now. We're at the end of the month, and we are potentially here looking at some kind of reversal pattern. I mean, this is a bearish engulfing candle on the monthly time frame, right? And the last time we had a bullish engulfing candle on the monthly was right here. We eclipsed 1, 2, 3-4 months of price action within one candle, and look at how strong that uptrend was. Engulfing candles are one of the most reliable things you can use in your analysis to give you a perspective of where the market is going to go in the long term. And a lot of people just don't understand this, or they don't apply the basics because, I don't know, they just aren't very good at doing it, and so they start overcomplicating it and adding a million different indicators onto the chart. But so far, we're not looking at any indicators, and we're actually forming a really healthy picture of the market. This, these engulfing candles are important. They're not something that you just want to brush off casually, and we formed another one right here, which could definitely be something problematic for Bitcoin. This is the picture I'm trying to paint for you guys. It's just not that clear. We are still in a lot of danger for Bitcoin right now, and that's going to stay that way until we break the key level that I told you I'm looking for, which has always been sitting right here at 28.6. This is the key level that I've been discussing with you guys for quite some time on this chart, where if we are able to get above 28.6, that is going to represent breaking a lot or most of our resistance. And, I think that's a really big deal. Breaking this resistance right here could result in the market shooting up. And that's exactly what I want to look for with the long position that I'm in right now. I told you guys that I've been trading this market regularly right here, and I've been doing it on the exchanges that are linked right here in the description down below. BingX allows you to trade these markets without KYC, so you don't have to take a picture of yourself or a picture of your ID in order to trade. And you can trade not only Bitcoin and all the other shitcoins that your heart could desire, but also a bunch of traditional finance markets. You've got indices like the S&P 500, you've got Tesla, Apple, Amazon, all with leverage, gold, oil. Again, without KYC. This is well worth checking out because there just aren't that many options that combine all the benefits and advantages of this exchange in one place. Over $5,000 in bonuses too. Well worth checking out with the link in the description down below. And Bybit also giving you up to $30,000 in bonuses. This is free money that they credit into your account. Depending on how much you deposit, depending on how much you trade with, they're going to give you up to $30,000 in trading bonuses, which you can redeploy into the market, and any profits that you generate are yours to keep. These are some of the most powerful, best offers I've got for you guys right now, and they are well worth checking out if you want to take advantage of this volatility right here. If we do take a look at where the resistance levels sit, again, the big development for me has been breaking the Ichimoku cloud of that was offering resistance to the market. Let's actually just take a cleaner chart now, because this is starting to get quite ridiculous and quite crowded here. So bear with. I don't know why, but my Wi-Fi is just not working right now. But on the 4-hour time frame, yeah, this is so beautiful. Look at this beautiful cloud right here. We've pumped straight out of it. We're just trading at the top of it. It clearly doesn't matter anymore. But the really strong thing that we've developed now is because we've managed to get this really big breakout. If we are able to recover ourselves back up, we are potentially looking at finding some support in areas like this now, which is definitely a really good sign for the market. If we are able to find some support as we start kind of dragging lower a little bit, I think that's going to spell some really nice opportunities for Bitcoin. But what's really important is if we just remove everything on this chart and just kind of understand where we are. I really like to just keep it simple, throwing, kind of basic horizontal lines like this to show you like, okay, this is kind of like the bottom of our range. This is kind of, more or less the top of our range right here. Anything below the line, anything below this line is a deviation, anything above this line is a deviation, and anything in the middle, we're just kind of range bound, right? And if we are range bound, then it makes sense that we now expect that we target the high. Whether that happens very quickly or whether that happens very slowly, it does make sense that the next kind of line we tag is going to be up here. And the thing for Bitcoin is we've just got this kind of intra level resistance, right, that I've been talking about, sitting at 28.6 right here. The more times we knock that door, the more likely we are to break it. So that's the kind of development that I'm looking for here. If we have to come down and find support and then knock that door again, that's completely fine too. In fact, one might argue that that is better for the market. One thing that's important to keep in mind is the debt ceiling stuff. Now, I don't talk about the macroeconomics of the U.S. economy and so on often, because I'm just not qualified to do anything, to be honest. You shouldn't be watching me for anything, but I'm certainly not as well educated or informed on the debt ceiling as I am on Bitcoin's triangles that it forms, you know, like I'm just better at TA here. But you know, one thing that's important to keep in mind is everyone was worried about, you know, the debt ceiling being reached and so on, but they've delayed it now. I don't know exactly what the details are, but what I know is that there are no consequences. In fact, there's no debt ceiling from now until the beginning of 2025. So we've basically got another 18 months of unchecked everything, really. You know, nothing changes for another 18 months, basically. Just basically doing the typical Western government action of kicking the can further down the road. Now, I'm not here to ridicule them or applaud them for their actions, because quite frankly, it doesn't matter to me as a trader, but it is important to know that one of the things that were really bearish for this market has now been removed. That can has been kicked a little bit further down the road. The response to that, if we take a look at the markets, is okay. You know, we haven't responded to this with any particular weakness or strength, but that's a really big deal, because actually, if the debt ceiling were to be reached, we'd probably expect a lot of blood in the markets, right? I think that was kind of what a lot of people were expecting to see. Now that that's been kicked down the road by 18 months, and considering we're already pretty bullish in this market, that might actually be a sign that this market is ready to continue to explode, right? That the dollar might actually pull back a little bit. And that is kind of what we're seeing so far. It's way too early to draw conclusions on this. The dollar can definitely continue to rally up, but I think this is important. You know, if we remove negative stimuli, and if we're already in a bullish trend, as we are, if we zoom out very clearly for Bitcoin, for the S&P 500, for gold, you know, if we're already in a bullish trend and then we remove negative stimuli, that can be a really strong factor. That can really be something that pushes the market higher. And it's well worth paying attention to for that reason alone. You know, I can't stress enough that if we do break this line, I don't see any resistance until, you know, probably here at $30,000 flat. But you know, we've already broken quite a bit of resistance. First of all, we recovered this range. Second of all, we recovered the resistance here, and we've also pumped all throughout this green box here. Like, we've actually done a lot of impressive stuff, which, you know, like, I just don't think that the actual 30K line is very strong. I don't think it's a strong area of resistance. This level right here at 30K, I don't think this line is actually that important compared to all of the other resistance that we've already broken. You know, and so that we've, you know, considering that we've already broken so much resistance on this chart, you know, it kind of just makes sense to me that, you know, we find ourselves, you know, breaking the 30K level if we get there. So to me, the ultimate test is going to be here. And, you know, like if I was in a short position up here, I would be very, very uncomfortable. I really wouldn't want to stay in a short position above 28.6 because I know that there's just not that much resistance up ahead. And, you know, considering that we set this high so long ago now in the middle of April, it has now been 45 days, you know, it's definitely been enough time to break that resistance level too. So I'm definitely liking what I'm seeing. The one key thing that Bitcoin needs to do now is prove that this was a double bottom. And one of the best ways you can prove that it's a double bottom is by rising up quite high. And again, you know, if we measure this from low to high, we are up by like 10% now. So rising up by a significant margin is very useful. And also breaking resistance levels is very useful. Also setting a new higher low, very useful. Setting higher highs and higher lows. This is what we're looking for in order to show that our double bottom may have been, you know, true. All right. And as the picture develops, this is the thing, right? As traders, is that right now the picture is still a little bit unclear and the price is low. You know, we're still not above 28K. If we get above 28K, if we get above 29K, it's going to look really obvious that this was a double bottom. It's going to look really obvious that this was a double bottom once we get a little bit higher. So it becomes easier to bet on Bitcoin, but the reward becomes a little bit smaller, right? So this is the thing that you need to keep in mind, is that if you're earlier, you're going to be eating a little bit more risk, but you're also going to be enjoying some more reward. Now, this is a quite important concept because a lot of people don't actually consider it. A lot of people don't even know that they should consider it, you know, and it's all about evaluating for every dollar that I risk, how much do I stand to gain? You know, it might not be worth being early. A lot of the time, it's not worth being early. That's why I don't, you know, buy the hype with shit coins and meme coins and hype coins and so on, because yes, I know that there are coins like Pepe that just explode and make people millions of dollars overnight, but you're not going to be part of it unless you have insider information. So, you know, you'd otherwise just have to burn your cash in 10,000 shit coins that you never see again. And your money is just going to be tied up, not doing anything for you, you know, and you're not going to enjoy any reward most of the time because you're just not going to pick the right coin. It's just hard to do that. you know, but as a trader that's kind of taking a little bit more active responsibility for what you're doing, because this is much more active work. You know, you have to think, you have to be on it. It's not like you buy a coin and fuck off and come back in 6 months. You know, if you do that as a trader, you're just not going to make any money for 6 months. So, you know, you have to be a little bit more involved. But what that means is you can directly influence your results a lot more than if you just hold a shitcoin. You know, and that is really important to keep in mind here. You know, we're not going for, you know, necessarily home runs or big gains or anything crazy. We're not even trying to trade all the time. We're just looking for the nice, healthy, safe opportunities. And if it means that, you know, I enter a market a little bit late, but I still enjoy a lot of upside, well, that's a damn good deal to me, all right? Because I don't want to risk a single dollar more than I have to, but I want to maximize the profits that I can stand to make, okay? So if I can risk, you know, a small amount of money, and you know, if my reward is here, you know, and if I cut my reward down to just this, but my risk goes from like this down to this, you know what I mean? Like, it's just a better deal. I'd rather cut my risk down by half and lose 10% of my reward than, you know, keep my risk where it is, you know, and then potentially lose more money. It's just better to eliminate more risk, even if it means that you make less money, because as long as you don't lose money, you're still moving forward. This is a really important concept for people to get, and that's why I'll happily talk about this for many, many minutes during my, you know, 10, 20-minute videos that I make for you guys, because they are such critical concepts that, quite frankly, a lot of people get wrong, right? So I'm here to, you know, try and plug that hole for you guys. Hopefully, I am doing my job here pretty well, but back to the analysis. You know, again, support down here. I'm looking for the Ichimoku cloud. I'm looking for the daily EMA ribbon. You already know the deal. This analysis is not different. You know, we are actually at the daily EMA ribbon right now. Let's wait for this to load up. I'm not sure if it will. Yeah, there we go. So we are actually finding support off it right now. You know, so to me, I mean, I'm just kind of feeling like it's a matter of time until we break above 28.6. You know, I am still sitting in my long position. I was in some shorts, didn't really lose much money on them, closed most of them at break even, so I'm happy with that. You know, and if we do end up sweeping this low, then 25k is still in play, and this just becomes an even more longer drawn out correction before probably continuing on upwards anyway. So there's no losing for Bitcoin in my opinion here. It's still in a good position. You know, it always has been in a good position, even when it was down here. You know, it was only $1,000 more until it falls down to a beautiful area of support, you know, which would probably help it, you know, continue to rally up. So on this occasion here, it might look like maybe we didn't have to do that, you know, and that's completely fine. You know, and so I'm going to keep watching this to see if we do kind of slip below. I don't know if I'll be looking for more short positions now. Maybe, we'll see. It depends on what the market actually looks like, and I'll obviously be keeping VIPs very, very closely up to date with that, as I always do. And yeah, a break above 28.6, and in my perspective, we're setting new highs. I mean, I really can quite easily see 40k, 41k now that we've, you know, I mean, we have been consolidating for so long. So, you know, for it to, you know, if we get the breakout tomorrow, I'm sure within like 2 months, 1 month, we could be at $40,000 even, just because we've coiled up for so long, you know. And then when you coil up for so long and then you get a big breakout, especially like this is a really good line right here. I mean, if we break above this line, just think about how many resistance levels we're gonna just break out of, you know. And this is really important. It's like, if you've broken so many resistance levels, the other thing that it means is that you don't have more resistance levels, all right? And that's really, really reassuring. You know, we're not gonna have that much resistance anymore if we break what we're facing right now. And if we've got enough bullish momentum to break resistance, and then we don't have any resistance anymore, but we still have bullish momentum, that is usually what results in this kind of price action. You know, when we've got a lot of bullish momentum and not that much resistance, you get big price explosions. And that's why I think clearing this $30,000 range, getting up to 40, is looking like it could happen a lot faster now, you know, simply because of all the pain that we've endured. This is, you know, I mean, look at what happened here. Whenever we endure a lot of pain, that's when big opportunities come. That's why it's so important to be set up in the right places if you're not already set up in the right places, or to get the bonuses that you want. If you've already, you know, got an account on these exchanges, you can always make a brand new one, for example, and still, you know, kind of reap those benefits as well. So that is well worth checking out for those reasons. You know, because this is the time where the market is really kind of gearing up. You know, for me, I made a trade recently I told you guys about on Bybit and OKX, you know, and the fact that I traded on multiple platforms actually saved me from losing money, you know, and it was in an interesting way because of the way stop losses were triggered. But the bottom line is that by simply being smart about my trades and executing them on multiple different platforms, I was able to keep myself even safer. You know, this kind of thing, if you're trading with anything above $1,000, $10,000, you know, is gonna be very useful to you in saving money and making money. You know, if just trading on a second exchange somehow through some weird fringe black swan event saves you from losing $500 or saves you from losing $50,000, you're going to be immensely thankful that you also got paid to do it with all of the bonuses here. Over 70k in bonuses available to you with the links in the description down below. I also want to point out that Prime XBT, Bitflex, OKX all don't require KYC. OKX does have limits that are kind of low, but Prime XBT and Bitflex, super flexible. BingX as well, no KYC at all. So lots of really, really good options for people that are a little bit more privacy minded. And if you don't care about that, Bybit is still going to give you up to 30k in bonuses. This is still by far the best bonus I've ever seen on any exchange, because this is straight money that you can trade with. So you imagine you throw this into a trade that makes even 10% profit, that's $3,000 that you can withdraw. You can trade with money that wasn't even yours to begin with, but the profits are entirely yours to keep. So absolutely crazy stuff, well worth checking out. If you want to get inside of VIP, these are the steps on screen right here as well. You know, and I'll keep watching this to let you guys know what I'm seeing. Obviously, altcoins are always quite interesting as well. Traditional finance, always going to be quite interesting. So we'll watch this. This is a really important time for bulls. I'm very happy that bulls have a chance, you know, to even pull this off so far. You know, it was looking pretty bleak for bulls when we were down here, but this recovery, like I said, it has really changed quite a lot of things in this market, and it could have definitely tilted the momentum back in favor of the bulls. So this is going to be quite interesting to watch, and especially that 28.6 level. You know, in all honesty, this is even a level that you know, I would be tempted on. I would be tempted to increase my long position up here, you know, because of how significant this resistance level is. You know, if we break it, yeah, I would want more money, you know, long on Bitcoin here, because all it means is that we're breaking critical resistance areas within a bullish market. And after we've already suffered, you know, quite a big correction, down by 18%, and correcting for, you know, 75 days, for 2.5 months, you know, and now we're starting to break, you know, potentially quite important resistance levels. That's a really strong sign that this market could just blow up way higher. So, you know, I'm not gonna fail to pay attention to that kind of stuff. Maybe there's other opportunities in the altcoin market. You know, I don't need to trade Bitcoin again because I'm already in the long position. I'm just going to stay in this long position. But, you know, Ethereum, for example, there could definitely be something to play with here. Other altcoins are way more interesting than Bitcoin and Ethereum, in my opinion. So, you know, probably some trades coming there for me relatively soon. Just waiting for the right opportunity to pounce on the market. And, of course, I'm keeping you guys very closely up to date on that on the daily channel. You'll see some more videos from me on there probably later on today, so make sure you are subscribed to that if you're interested, if you do want to watch more of this content. And if you're not already subscribed, then obviously make sure to subscribe to this channel, hit up the likes, take the bell, do all that good stuff, take advantage of the beautiful offers available to you. Just free money that shortcuts you on your trading journey, gives you, you know, discounts on fees, whatever the case may be. It's all worth checking out, and I'll see you all in the next video. Thank you all so much. Cheers.